Are you stuck trying to figure out liabilities? Can't seem to wrap your head around them? Well, don't worry. In this video, I'm going to explain exactly what liabilities are, what the 5 most important types of liabilities are in business, and how you can use your knowledge of these liabilities to impress your boss and boost your way up the corporate ladder. Let's get started. Liabilities are everything that a business owes to everyone else apart from what it owes to its owners at a certain point in time. Let's break that down a bit. Liabilities are everything that a business owes to everyone else apart from its owners at a certain point in time. So, you might think that we are just talking about money owed, and you'd be mostly right, because most liabilities are just money owed by the business at a certain point in time. For example, things like loans, money owed to suppliers, and money owed to employees. But, just to be super clear, it's not just money. It's actually everything that the business owes to anyone other than the owners at a certain point in time. So, instead of money, the business could owe work, or even something complicated, like the obligation to make a trade on unfavourable terms. The important thing is, at that specific point in time, the business owes something to someone else, and that person it owes it to is not an owner of the business. The reason we're excluding what's owed to the owners of the business from liabilities is because what's owed to the owners of the business is called equity, and that's a topic for a whole nother video. The certain point in time bit is because liabilities show up on the balance sheet, which is just a big list of all the assets, liabilities, and equities of a business at a certain point in time. There are literally hundreds of different types of liabilities, but in this video I've whittled it down to just the top 5 that you actually need to know about in business. Well, you can learn about the others if you're interested, but if you just want the top 5, then here we go. Accounts payable. Accounts payable is just a fancy finance phrase for the amount of money that the business owes to other companies who have sold them either products or services. Most of the time in life you just pay for stuff straight away, but in a lot of businesses, companies get sent an invoice to be paid in an agreed amount of time, usually 30 days. For example, if your business wants to sell some classic, timeless items like fidget spinners, then you'll need to buy these fidget spinners from another company. Once you get the fidget spinners, the company will send you a bill that you will have to pay within the agreed payment terms. Because this bill represents something owed to someone else who isn't an owner of the business, this is a liability that is shown on the balance sheet. And this liability is called accounts payable. Your boss will care a massive amount about accounts payable because it represents the amount the business owes to others that it's already received the bill for. One important point to remember is that accounts payable isn't a bad thing. After all, how else would you get those fidget spinners to sell and make a tidy profit? But it's an important number to keep an eye on, because it represents how much money the business has committed to pay others. Not having enough money in the bank when the time comes to pay can lead to late payments. This will make your business look bad, or maybe even worse. Number 2, wages payable. Wages payable are the wages that still haven't been paid to the workers of the business for work they've already done. They are a bit like accounts payable, except that the money is owed to the employees of the business rather than to other businesses. Wages payable are a liability because the workers have done the work, so at that certain point in time we are measuring from, the business owes the money to the workers. Usually, wages payable is only a month or maybe 6 weeks of wages maximum, as the workers don't like waiting too long to get paid. For example, imagine your team has done a full month of work, but payday is the first Friday after the end of the month. Then, if we are measuring from the end of the month, the business owes a full month of wages in the future, because your team has already done the work. So the business has a liability of a full month of wages at that point in time. As you can see, liabilities are all about what the business owes in the future as a result of what has already happened in the past. Number 3. Loans. Loans are money that has been lent to the company by a company or person outside the business. Not all companies have loans, but if they do, they are likely to be some of the biggest balances on the balance sheet. Loans almost always attract interest, more on that next, but the loan itself, called the principal, is usually recognised as a separate liability to the interest. One thing to note is that if the business you work for is big enough, then it most likely is a collection of smaller businesses linked together as a group. It's very likely that some of these businesses have lent money to each other, so they'll have loans to and from each other on their respective balance sheets. If your business is small though, any loans it does have are probably just going to be from a bank. For example, if your business wants to expand its fidget spinner section by opening a huge new store solely for fidget spinners, then it might need to get a loan for $500,000. As soon as your business gets this loan, it now owes $500,000 plus interest back to the bank, so at that moment it has a liability as it owes something to someone else as a result of what has happened in the past. Number 4. Interest payable. Interest payable is the amount of interest that a company has to pay on its loans that it hasn't yet paid up until that point in time. It's a bit more confusing than understanding the principle of the loan itself, because at that point you get the money for the loan, you have a liability needing to pay all of that money back. But with interest payable, the liability is the amount of interest your business has been charged only so far and that it hasn't yet paid so far, rather than all the interest it will be charged in the future. Let's look at a quick example to make it clearer. Imagine your company borrowed the $500,000 to build the fidget spinner store on the 1st of July. The interest rate was 5% annually and it needs to be paid back at the end of the loan. How much interest would we have accrued on the 31st of December? The answer is $500,000 times the 5%, but then also times the 6 months of the full year from the 1st of July to the 31st of December. So that's $12,500. That's the amount of interest the business owes up to that particular point, the 31st of December, as a result of what's happened in the past, getting that loan with that interest rate. You might never need to care too much about interest payable, but as you ascend up the ranks in business, having a good idea of the financial structure of the business you're working in will help you stand out from your team. Number 5. Deferred income. Deferred income is the liability caused by invoices that have been sent to the customers for work that has not yet been done. Since the work hasn't been done yet, the income can't be shown on the income statement, because the income statement is only for incomes that have already been earned, as well as expenses that have already been incurred. Check out my income statement video for more deets. So, the deferred income gets put on the balance sheet until it's earned. Your boss will care about deferred income because it's the amount of work that your business has already billed and has committed to complete for its clients in the future. Deferred income is a liability because the business now owes this work to its clients in the future as a result of what has happened in the past. So, those are the top 5 liabilities to know about that will help you set yourself apart from your team and unlock your career. If you want to know loads more accounting secrets to help you get ahead of your team before they get ahead of you, don't forget to like and subscribe, and check out the complete course in the description. Thank you for watching. See you in the next video.